Home prices make a jump. Inventory makes a jump. Buyer demand in our area, questionable. Let's go ahead and jump into all that right after this in the new episode of Mikey's monthly market updates for April of 2022. See you on the other end of the break. Hi there, everybody, and welcome back. Mike Petras here, your star realtor of Star and the Treasure Valley, back with a new episode of Mikey's monthly market update for April of 2022. For all of you that are new to my channel, this goes ahead and breaks down what is happening in the real estate market right here in the greater Treasure Valley area, especially as it pertains to Ada and Canyon counties. So let's go ahead and let's dive into that information and we'll see what's going on. So let's go ahead and let's start off with Ada County like we normally do here. Some crazy things really, what has just been happening over the last couple of months, actually in both counties. And as we can see from the median and average sold prices, wow, we are starting to really incline. In fact, actually, now we actually just hit $595,000 overall in the median price here in Ada County, which according to the stats is a 23.9% jump compared to what we had last year. Okay, which actually is setting new records. So again, we set a record last month, we set a record this month, literally wholly equity. If you do own out here, but if you are on the fence about being a buyer, again, I would say get in there because these prices are going to continue to come up, but that might shift a little bit as we kind of get into our thought process a little bit later into this, because as I mentioned in the beginning of this video, inventory is also on the way up, and really is that due to the interest rates and where they currently stand? My guess, yes, I think it's a precursor to all this, and we'll talk a little bit more about my thoughts. But let me just go ahead and show you over the last 6 months, since November to today, literally we are looking at the overall sold price, almost $60,000. And if you're looking at the average median price here in Ada County, it jumped up 60,000 or just really near to that. And if we're looking, because we know that last month we had a $25,000 jump really between the median and the average sold prices compared to the month prior to that. And if we look here, look at the median price, we're looking at $20,000 jump in Ada County, and we're looking at almost the same in the overall average sold price. So prices are on the way up. Why? Because again, if you do watch a lot of these videos, you do know that our market really kind of comes down to supply and demand. So let's go ahead and take a look at that. Okay. If we're looking at the total actives versus solds, as we know, okay, over here, when COVID hit, really our inventory went back down to nothing, but the demand was still there. It was sucking up all the inventory, which is absolutely since, May of 2020 to about June of 2021, the inventory wasn't really recovering until that point. And then we had September of 21 to where it really kind of started coming back, some inventory, but the demand has kind of flatlined itself. But one of the things that I do want to notice here and go ahead and point out in our overall inventory is that we're starting to tick up. Okay, if we take a look at the line, especially over here, okay, and most of this is going to come in new construction, too, as well. We can see our inventory is finally surpassing the buyer demand, and it's actually kind of doing it earlier, or kind of a little bit earlier than kind of where I was guessing that the inventory would really start to influx. So we're just going to have to wait and see, in terms of where the inventory is going to lay out over the next few months. Well, why is this? So we've talked about inflation, we've talked about interest rates, and we've beaten them to death. And I really start to think that this is starting to play. It's starting to kind of wipe out a little bit of the buyer's demand out to this area a bit. I mean, we know that first-time home buyers are people that, are on the lower scale of being able to qualify for home ownership. These interest rate increases have really kind of, wiped that out. It's made it very, very difficult on particular sets of buyers here to the Treasure Valley or that exist in the Treasure Valley already. So couple that with a high home price and you really got yourself, a double whammy in terms of what's going to reflect in our inventory and how this could possibly affect our market. So a lot of what did close, and I just want to mention this, what did close over recently was people that were under contract in either February or even March, okay, and started closing. So we really have to pay attention to these pendings, okay, that we see above, okay, in terms of how those pendings are going to kind of like affect, or they're going to kind of come down, in the next couple of months, and just really kind of see how this inventory is going to play out and what is the interest rates impact, okay, on our local market. So it's still kind of out there, but we do notice that jumps have been kind of continuing since the beginning of the year. So I think it's starting to play and tip its hat, and hence the reason why I think our inventory is on the way up. So if we look at the inventory, again, no inventory, that demand was there. And really it wasn't until September of 21 to where the inventory started to surpass. And again, the buyer demand kind of stayed, consistent across the board. But in Ada County, I mean, you kind of see it ticking down, over the years because it's getting more expensive in Ada County as, say, Canyon County. But this is the first time since September of 21 that now our inventory has surpassed the buyer's demand. And this is going to be something we're going to totally pay attention to. Existing home inventory here in Ada County, as you can see, it's on the way up. Okay, but so is the buyer's demand. You kind of see the buyer's demand ticking up a little bit here too. But for the hot season, and we're starting to get into it here in real estate, I would kind of expect this to maybe be a little bit on the higher end. But again, the interest rates I think are kind of going to start impacting this, and we'll just have to pay attention to the data and see what happens in our buyer demand here in the local market. But for right now, I want to let you know, everybody that's listening, the buyer demand is still hot here. It is. It hasn't really cooled off and tapered too much yet, according to the data. We'll just have to continue to pay attention. If we're looking at new home construction inventory, wow, what a jump. Okay, buyer demand seemed to kind of tick down a little bit. Okay, almost back down to the levels that we saw back here in January of 2019. So it's kind of tapering, and you can kind of see the inventory going up. So buyers, if you're looking between the two markets, the existing home inventory is starting to return, but new construction is not something that you probably want to not pay attention to, because there's going to be more inventory there for you to go and be able to buy up, as per se, to the existing home market right now in Ada County. But again, a point here is that inventory is back on the rise. Buyer demand probably starting to soften now because of the interest rates, and we're just going to have to still continue to pay attention. But buyers really good time to get in. We'll really talk about that in my final thoughts. But let's look on the days on market here. Okay, the days on market, they're still low. Okay, so there is some competition that is still out there. In fact, actually, I'm looking for it right here. Specifically on April, 53.2% of the buyers that were in the market had that competition. They were paying over list price. So there was multiple offers in these situations. So the demand is still competitively strong. Okay, particularly at the median and the lower price points. Okay, so again, that's where you're going to find a lot of this competition. But higher prices, kind of, or what really kind of created, just kind of backtracking a little bit to how the median home price and the average sold price jumped up, is really because the new construction segment played a large part of that in the overall price jump. So sorry, I didn't mean to go ahead and knock back to something, but just kind of want to let you know where it's really kind of coming from in terms of the prices. But still a demand out here, as we can see by the days on market. And even if we look at our cancels and expires for April of 2022, basically whatever's on the market is selling. We had very, very little expireds, people really holding out for that value that they want to get for their house, and then the contract is expiring. And then the cancels, really, I guess not a lot of people are changing their minds. They're packing up, they're moving out, and they're doing this, while they know they can still get really a reasonable interest rate. I know you're thinking, between the high home prices and the interest rates of where they're really at right now, at 5% and 5.5%, where the interest rates are really lying today, it's still historically low. And I do invite you to watch, especially Mikey's mortgage review that I came out with for the month of April recently last week. So please watch that and kind of see what's going on with the mortgage rate and what the Fed is doing to respond to the interest rates. It is definitely a crucial key to know. Okay, so just kind of recapping here, our median sales price is hitting $595 out in here in April, jumped up $20,000 from last month. But again, the average home sold, is down the 815, and the active listings is coming back up. So again, now the listings is kind of surpassing the demand really for right now. And we're just going to have to see how the interest rates affect that. But again, there's still a healthy competition out there. So buyers, if the sellers are appropriately pricing their home, expect some competition. And again, that competition was 53.2% in April, buyers that paid over list price. So there is still competition here in Ada. Okay, so let's dive into Canyon County. Again, the same thing. If we look at the median overall home price, jumped up along with the average sold price, it kind of tickered up again too as well. If we're looking at the 6-month separation between the both, we're looking at almost $50,000 in the average sold price, and we're looking at almost $70,000 in the median price. So again, I'll get to this in the final thoughts for buyers, but if you're expecting, because there's word of recession out there, and I honestly do believe that it's coming, and I actually did make a video on that too as well, which I invite you to go ahead and watch. I'll go ahead and put both of those links about the mortgage review and inflation at the end of this video. I invite you to watch those, because it really kind of lets you know what to anticipate. But again, if you're waiting, if you're thinking that this recession that's going to be coming up, which all the indicators are saying is going to be in play, that's going to be another 2008, I'm already going to tell you right now, buyers, that's a no. And you're going to continue to see these home prices either flatline or continue to go up, or as I've been saying in past predictions, that we might see ourselves a market correction coming up, but it's not going to be enough compared to what the interest rates are probably going to land at to make any kind of difference. You're not going to see like a 50% drop or more like you did in the 2008. Sorry, just not going to be there. Okay, so buyers, just keep that in the back of your mind. Overall inventory, again, Canyon County, our inventory has popped up beyond the demand. We can kind of see our demand ticker down a little bit. So we'll just have to pay attention again. But the inventory is starting to rise a little bit earlier than I kind of figured, and especially, going into the hot season. And again, we did not have an inventory spike until September of 21. So it's really kind of narrowing the window, and I expect the inventory to continue up. But of course, if interest rates, say they do get out of control, I do see a lot of sellers maybe ticking off from actually putting their houses up for list, considering where their interest rate is for their 30-year, 15-year fix, whatever it is that they have. So that's also going to probably stop a lot of these sellers from selling. They're going to stay put. So we'll just have to watch and see what's going on with that. Again, inventory, the demand, you can see all the way from like 19 to kind of today. Canyon County is a little bit more cheaper than Ada, so you can kind of see the demand, ticker up a little bit. But again, beating a dead horse here. Since September of 21, the overall inventory has now surpassed the buyer's demand, and we'll just have to see what happens with the pendings and the interest rates and see if our buyer demand is really kind of softening. But again, as I mentioned in Ada County, again, the interest rates, coupled with home prices the way that they are, is kind of almost wiped out a class of buyers that is out there. So don't be one of those victims. If you want home ownership and you're renting, because remember, you're worried about interest rates. Well, if you are renting, you are paying 100% interest rate. You're not getting anything. You're not cashing in on what is happening in the real estate market in terms of these equity pops that we are seeing in the overall average sold price and median price. So get in, put your money, if you have the means, for down payment, and there's all sorts of options that you got to get this down payment, or for different down payment structures. Reach out to a lender today, talk with them, and jump into the game. Get in there and make this market work for you. Again, existing home inventory, buyer demand kind of ticked down a little bit in Canyon County, but you can see the upswing of the inventory. And I do expect the inventory to probably swing here while we're kind of seem to be in a sweet spot before things get interesting with the Fed. And then new construction, same thing as Ada County, boom, it jumped up. Buyer demand kind of tapered down a little bit. But again, buyers, if you're looking in Canyon County and you want to buy a home, look into the new construction. There's a lot more inventory than there is in the existing right now. So, but either way, it's just something to consider, and I'm more than happy to get you into a new home too as well. Days on market, again, still indicating a healthy market out here. 19 days on market. The competition stat like I had for Ada County, I unfortunately don't have that in terms of how many buyers did pay over asking price, but I'm assuming it probably around the same, okay, as Ada County. Hopefully I'll get those stats next month and be able to tell you. But again, the competition is still good out there. People, there's multiple offer situations, okay, and people are closing quick. They're doing what they can to close quick and to get their offers accepted. And you can see it on the days on market. So again, if we're looking in cancels and expireds too as well, whatever's hitting the market, again, is selling. Not a lot of expireds, not a lot of cancels. Okay, not a lot of people are changing their mind. They're getting up and they're getting out. Okay, so let's go ahead and let's take a look at just the overall market snapshot for Canyon County 2. Again, 476,500 median sales price jumped up from last month significantly. And again, the same trend here. The average homes sold is down compared to what the active listings. So again, now the active listings have surpassed basically what's being bought. So again, you know, as I get to the final thoughts here in just a moment, I'll go ahead and kind of break this down and let you know as buyers, sellers, renters, and investors what to expect and really kind of what your keys are in this market. And then lastly, you know, days on market, they're still low, okay, indicating a healthy competition. So we're just gonna have to pay attention over the next few months to see really how the interest rates are going to affect the buyer's market and what is it going to do to the inventory too as well, to be able to really kind of give you the full predictions on what to expect for the rest of the year. So let's go ahead and let's get to my final thoughts right after this. All right, everybody. Hey, thank you so much for taking the time to watch that portion of the video. And of course, if you are familiar with Mikey's monthly market update, now it's time for the final thoughts section. Okay, so let's go ahead and start off with you buyers as I normally do. So buyers, what are we seeing right now in the market? We're seeing that prices are going up. Okay, they're not coming down, anything like that. They are on the rise, and they are on the rise and setting records for on the rise. So if you've been on the fence, okay, hoping that, you know, this upcoming recession, which all of the flags are really kind of indicating, is going to turn this into another 2008. I'm just going to have to say sorely, that's not going to happen. That was for an entire different list of reasons that I talked about. Basically, the subprime mortgage crisis, which just to kind of put it into words, I mean, you're talking about people with, you know, 580 FICO scores and no income, no assets, no job, buying multiple properties. Well, that got corrected after the market crashed. And they came out with the Frank Dodd Act, the Consumer Protections Act, stuff like that to be able to stop that from happening. Now, mortgage lenders really have to go through a long process to make sure that you're qualified. Okay, so if you're really just kind of waiting around and saying, hey, this recession, well, I invite you to go ahead and watch my video I came out with about 2 or 3 weeks ago now regarding recessions. And I'll go ahead and put it at the end of this so that you can go ahead and click and watch and see how prior recessions affected the home market or the real estate market, which in fact they didn't. Okay, 2008 was an exception, but that has been corrected. So anyways, getting back to the point, home prices are on the rise, so are interest rates. Okay, there are too few dollars out there to buy few products. So in order to stop this happening, in order to curb the fever pitch to the demand, the Fed has to go ahead and they have to raise the interest rates in order to curb inflation. And that's basically the definition of inflation. Too many dollars buying too few products. So what's another thing to expect? We already know that the Fed came in and upped the federal funds rate by 0.5% this month. And they're already slated to do it again in July. And they're slated to do it again probably in September. So we could actually, the federal funds rate could literally get above 2%. But that's really just one of the indicators. But the other big thing is that the Fed is selling off their mortgage-backed securities. That's really going to be what's going to be raising your rates. But there is a correlation, regardless of what anybody says, federal fund rates, between interest rates. There are some variables that are different, of course, but the mortgage-backed securities is definitely something as they start dumping off, basically their money supply or their supply, it's going to raise up the interest rates. So with home prices on the rise, with interest rates on the rise, right now it's kind of a sweet spot before the Fed is starting to get aggressive, which they have to. Okay, in fact, actually, a lot of the economists out there, about 75% of them, have really said that the Fed is taking it too easy. So anticipate interest rates to be on the rise. But again, is that a bad thing? So if you come in, okay, and say you buy today at the median home price of, say $575 out in Ada County, right? So if you're purchasing at $575 and you got a 5.5 interest rate, well, if this recession comes in, when recessions do hit, historically, the rates will come back down in order to correct the recession, to get people back out there, to, instill their money into the economy and get things rolling again. So if you buy now, expect those rates to come back down, and then you can just go ahead and refi. Now, if that recession comes at the later of this year or beginning of 2023, which most of us think that this probably when it's going to hit, so it won't be terribly too long, potentially, that you're holding on to a high interest rate or what you would consider a high interest rate compared to the 3.25 that we saw compared to the 5.5 that we're at right now. So buyers, not all hope is lost. But if this continues, if the home values continue to go up and say even a market correction does come, it's not going to be a big one. Say even a market correction comes and we lose 10% value or 5% value. Think about it. If home prices are still on the way up until that eventually comes along, when it comes back down, is it going to be that significant? So again, right now is a good time to get in and buy. Give me a call. I'd love to discuss it with you, and we can go ahead and discuss options with all that and get you in touch with the right mortgage lenders and the right mortgage plan for you if you need a mortgage. Of course, cash buyers, that kind of speaks for itself. So either way, buyers, great time to get in still before things get even higher. Because again, another 2008 is not around the corner. It's not coming. All right. So let's go ahead and let's get to sellers. All right, sellers, your turn. Okay, so again, if you are trying to sell, you are going to be in the same position of the buyers. So definitely pay attention to what is going on there. But as the interest rates do rise, you might find yourself maybe a little hesitant, or maybe you already are hesitant on making any kind of a lateral move because you got a nice sweet, 3% interest rate, right now as compared to the 5.5. But maybe you have to relocate for your job, or maybe there's something a little bit more pressing that you have to relocate for. So again, follow what I just said in the buyers section, because this will kind of apply to you too, that, even though home values are generally going up across the entire US, making it now before they continue to go up, okay, et cetera, and then being able to refi when those rates come down after the recession hits. It is what it is. But I do see, some of the sellers, and I'm going to go ahead and say this to the buyers too, if you're still paying attention to this section, as inventory, as we know, is on the way up. Okay, buyers, okay, sellers, you can kind of maybe anticipate that as interest rates rise, that might even curb some of the inventory that is currently coming onto the market. That you could be a little bit more hesitant, okay, to want to get up, sell, and move. So right now, honestly, sellers, you're getting more home value as it goes. Interest rates are still in a really historically kind of low aspect, and it may be a good window for you, okay, to want to go ahead and sell. And I think that's why I think we're kind of seeing a little bit of the spike in inventory that we are, because some of that buyer demand is probably tapering off, and it has in certain levels with certain buyers, because the interest rates have just kind of pushed them more or less out of the market. But right now, the inventory, it's still not to the area to where you're going to have a lot of competition. Again, a normal healthy market has about 6 months of inventory, and really between both Ada and Canyon County, and I know these numbers are a little bit different, they're really kind of sitting like around a month, okay, is where we're at, maybe a little over a month in terms of that. So there's still a high demand, right now from buyers coming in. You can still see it in the stats. Okay, it hasn't softened, that much, but as that inventory grows, it's just going to make it harder for you to sell your home if you are on the fence, because you're just going to have more competition out there. So again, sellers, if you are looking to sell, feel free to reach out to me. More than happy to discuss this, and we'll go ahead and set up an appointment and talk about your home's value, and we'll talk about strategies and everything else to get you the most money and sell your home in the quickest amount of time possible. So I look forward to hearing from you. Renters. Okay, this one kind of speaks for itself. Rent is on the rise, and it's going to continue to be on the rise due to inflation. You see everything else on the rise, so is your home value, your rent value, or your rent that you're going to be paying. Sorry. I mean, as inflation goes up, so does everything else. And in that aspect, your rents are going to go up. And again, if you're stressing out, about a 5%, 5.5% interest rate, if you're thinking about it, renters, you're paying 100% interest rate, and you're getting really nothing to show for it. You're not getting any equity. You're not jumping into this market and kind of riding the coattails of what's happening. Renters, so if you have not reached out to a mortgage professional, and you do think that you have the means, you have the down payment, you have all that, good jobs, reach out to a mortgage lender, discuss the option, because there's many different mortgage plans out there that you can get into to be able to get you into home ownership. So if you have any further questions about that, or you're looking for a reputable mortgage lender, feel free to reach out to me. More than happy to discuss that with you, and we'll go from there. So investors, you're last. All right, lastly, investors, of course, as you know, and I kind of just hit this most of the time, if you're out, especially in the flip and fix game, or in the flip game, there's really kind of not a lot out there and a lot of competition for it, okay? But again, if you're in, like, say, the rental side of things, and you're buying up investment properties to be able to rent out, of course, as you know, rents are on the way up. But so are those interest rates too, if you do need to get a mortgage. But say you're a cash buyer and you're coming out and you're buying up properties, well, you can still cash in on what's happening with this equity growth. And on top of that, the rents are going up. So it's a good opportunity for you to get, a decent cap rate. Our cap rates are really out here kind of sitting at about, 3-4%, all depending on what you're getting, of course, and a bunch of other stuff. But never a bad idea. And I'm more than happy to discuss those numbers with you, run those numbers with you, and get you the investment properties that you're looking for. Now, of course, if you are looking for a mortgage, and say you are trying to get investment properties for rentals, that mortgage is going to be a little bit higher, okay, than what a primary residence is going to be. So I definitely recommend that you reach out to a mortgage professional and discuss that. And of course, everyone, again, thank you so much for taking the time out of your day to watch this video. Of course, if you have any questions, or you're looking to buy, sell, or invest right here in the Treasure Valley or the greater Boise, Idaho area, feel free to reach out to me. You can reach out to me at 208-715-STAR. Again, that's 208-715-7827. And of course, buyers, if you want to begin your shopping experience today, please feel free to visit my website at www.yourstarrealtor.com to start taking a look at properties. Of course, if you're thinking about relocating from out of state right here to the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, before you go, please hit that subscribe button below, click the notification bell so that you're constantly in tune with all the videos that I do come up with. And again, I look forward to the day where we speak. I look forward to calling you my neighbor. God bless. Until then, thank you so much. Bye-bye.